Welcome to Real Estate 360 Live with Ryan Sloper, the trusted name in real estate radio. Now, here's Ryan Sloper.
Welcome back, everyone, to another episode of Real Estate 360 Live. I'm your host, Ryan Sloper. For those of you not familiar with the podcast, my guest and I will cover all angles of real estate, from interest rates to the economy to what's happening in Washington, the Federal Reserve, Janet Yellen, what's happening overseas in Greece. We cover everything here, kind of break it down, hopefully on a more elementary level for many of you that are trying to figure out and decipher what's taking place in the world today as far as real estate, finance, mass market manipulation. We tend to talk, a lot about the Fed and what's taking place overseas. But, it is important to pay attention to this, as I mention each and every week. It's not as simple as just looking at the real estate market and saying, oh, look, it looks like home sales are up or down, which is typical of National Association of Realtors or any other association out there. They have an agenda. Typically, it's to make money, not to give you the facts. This podcast is more about giving you the facts, or breaking things down, looking at economic reports, and giving you the information that you need to at least make a more informed decision, right? That's, at the end of the day, that's all I want to be able to do, is arm you with the information. We've been on this podcast / radio show for over 5 years now, and not much has changed, which is unfortunate. Many people disagree with me that I actually say, that the economy should have been allowed to fall on its face and bring itself back, because typically, you come back stronger when you allow yourself to do that. But we're fighting, as if we're going to solve this problem. This problem can't be solved even if we were to tax the rich, everybody in this country, to 100%. We couldn't get out of the debt that we're in, and it's a huge problem that at some point will come to a head. And as I mentioned on the last episode, just nobody knows what that timeline is. But I wanted to start out with Greece, and joining me on our panel, as he does each and every week, is Louis Camerosano. Louis is a former school teacher, a former attorney, and a former general manager of a major real estate portal. He's often cited in the media as a real estate industry expert. He's been cited in Wall Street Journal, Forbes, Fox Business, U.S. News, MSN, and numerous others. Louis, how you doing today?
Hi, Ryan. I'm doing grand. How are you?
I'm doing well, sir. Thanks for asking. So we kind of left last week talking about the same things that we're probably going to talk about this week, but we did, the whole Greece thing and what was going to happen. And actually last night they basically voted in favor of the austerity measures and basically another bailout. I believe this is the third bailout now, right?
Yep.
The third bailout, which you did correctly state that this was going to happen, right? Like that they didn't really have a choice. They weren't going to exit the Eurozone there. Much to the chagrin of Germany, who really doesn't want this. They want to push them out. And I believe they're going to vote on it this weekend, right? Or is it 100% set in stone?
No, I believe that all the nations have to vote on it.
Okay. So I believe that still there's been some reservations as to what Germany, if they want this or not.
Right. I think what Greece said was, oh, all right, we'll take your money. They voted on that. And now the other countries have to agree. But there's a lot of problems with it, because I think the IMF said that even at these numbers, it doesn't work. It's not going to work. It's destined to fail. So,
well, what's interesting is, though, I believe that when I looked, I believe the futures are up a little bit this morning, right? Because inevitably everybody knows, okay, hey, Greece is going to get bailed out again, right? As if it's anything different than the previous two times. As if it will be anything different than the next 2 or 3, 4, 5 more times that it happens.
Ryan, you're highlighting there really is no Greece deal. There's just a media event. Just like there's no recovery, it's a media event. Just like there's no real estate recovery, it's a media event. Everything is some kind of media event, and all these media events are designed to do is to cover up, as you were mentioning at the top of the show before we got on the call, they're designed to cover up the fact that there is a global debt bubble that is so massive that there's nothing that can be done about it other than to continue to throw more debt at it. And we've seen at Greece, we've reached the end of that. Even the amount that they're going to put in is still going to be considered austerity. Greece has to give up its sovereignty. They have to agree to all types of terms and conditions to get the extra money. And their only other choice was to go bust and default, but that would have meant they got no money. So effectively now, once you've reached the point where you take on more and more and more credit, if you are in no position of power, you have to take the terms they give you and basically just to stay alive.
Right.
And if you think about what happened with Greece, Ryan, other countries, everyone points out, the United States, Japan, and so on, they're in the same position. They have the same or worse debt to GDP and the same inability to pay off their debts. The difference is they're in a powerful position in that they can print the money, whereas they won't let Greece print the money.
Right.
So it comes down to there's this global debt crisis that can't be fixed, and the media just jumps in and pumps up numbers, pumps up deals, makes it seem like everything is okay, and it's not. But as you mentioned, the futures are up, and there's really no other game in town.
Yeah, and there can be a change in leadership in Greece, but that doesn't mean anything, because it'll be the same old, same old. It'll be continuing to kick the can down the road until everything self-destructs, because that's just...
No one can say, basta, we're not going to do this anymore, we're going to go broke, we're going to go bust and start over. No politician will ever offer that to the people.
No.
What did Cyprus offer? He offered an incompatible, unachievable goal, which was, we stay and they pay. Mm-hmm. And well, that, as we mentioned, that doesn't happen. I can't dictate the terms of your generosity. And basically what happened was they said, no, you stay and you will pay. Well, we make sure you pay, because we're going to take your assets and we're going to put them in a fund and make sure you hand them over immediately. And we're going to make sure that you guys pay us.
Yeah. Until about another 6 months from now, they need another bailout. This is going to be, it's just a vicious cycle. And I think you're highlighting, I mean, we talked about this. This is not isolated to one country. It's everywhere. And it's just the way that the media portrays different things. I mean, if we go over to Europe and look at how they were to probably report in the United States, we're going to get a completely different light than what we see here. I mean, everybody's making it seem hunky-dory because our stock market's up. As I mentioned, we'll jump into this too. Gold and silver sales are basically going back to all-time highs again. I mean, at least, and they're headed that way. Now, if you were to ask the Fed a question about that, they would not even give it any, they wouldn't recognize it as like, oh, that's not a big deal at all, because the prices of gold and silver is going down, but yet we have record sales. So the demand is there, but yet prices are going down. That's what happens in a manipulated market. That's what happens, because they can control it.
Isn't gold and silver are the canaries in the coal mine? They cannot allow them to sing. They've given these canaries iron lungs, because gold and silver should, by all definition, not just on the demand, but also on the speculative demand, because of all the turmoil and all the money printing in the world, you would think they'd be higher. They're not. So they're obviously manipulated. And you mentioned silver sales at the U.S. Mint have been suspended because they sold 2.7 million in 7 days. They were on pace to sell 10, 11 million Silver Eagles this month alone. Gold sales have picked back up. In 2 weeks, they were already at 63,000 U.S. Gold Eagles, which is more than they sold last month, which was up 363% from the month of May. So people are buying it, and the paper markets are manipulating it lower, because if gold and silver go higher, it indicates there's something wrong, and people should worry. So what's happening is people are worrying, but they're basically trying to tell people not to worry because, or don't think that that's the safe haven, gold and silver, because the price is going down.
Yep. And for that matter, to put your money in stocks, because look, stocks are still the safest place, because they want the stock market to continue to rise. Because see, inevitably, what happened when China's stock market crashed by 30%? Doom and gloom set in, right? Mm-hmm. And if doom and gloom sets in here in the United States and stock market tanks, and all of a sudden we're having technological glitches on NASDAQ or whatever. I mean, come on. Really? We've gone how long without having that type of issue, and all of a sudden it happens this pretty much the same day?
Right.
The same
and that
day?
gave them time to recreate the media event that everything was fine, and the next day it opened up higher.
And, we were talking before we came on the call basically about, the next election and whether Hillary can overcome, all these allegations and deflect. And as I brought up, it's a firm belief of mine that they'll put in there whoever they want. Just like, the Federal Reserve exists to basically, continue this Ponzi scheme. They're there in place. And although Congress asked tough questions yesterday, I believe it was the House yesterday. She had her testimony, which is twice a year, and she has another testimony today before the Senate. But she was asked all these tough questions, but she's never going to really answer them truly. And if Congress actually had half of a brain, they understand that they actually need the Fed to continue to manipulate, or else they might be out of job too.
Right.
So,
well, look at these congressional hearings that they have. What the IRS did. Yeah, they held hearings on it, but nothing happened.
It never will.
The people are still there at the IRS.
How many years did Ron Paul say audit the Fed, and they kept trying to push for legislation for more transparency, and it's never going to happen because they're going to say that it's basically could be very destructive to monetary policy for people.
Oh, she was talking yesterday how she was transparent and the Fed was transparent. And meanwhile, the one guy who asked questions, Pedro da Costa from Reuters or Wall Street Journal, one of the big media outlets, asked a question about this insider scandal at the Fed. After he asked the question, they booted him from the press conferences.
Yeah.
So there's no transparency. You can't answer questions. Transparency isn't, oh, look what we're going to show you. Transparency is let us ask questions. Let us examine your books.
Well, what's transparent to me is that she doesn't have a clue. She doesn't care. She continues to beat the drum. It's the same old, and it's because, just like everybody else, the politicians, the Federal Reserve chairwoman, whoever it is, they get into these positions and then somebody's telling them, look, you're not going to ever vary from the course that we're on here. You're going to stick to this narrative because if you come off of it, everything could come crashing. So
well, what is the narrative right now, Ryan? What did she say?
The narrative is to continue to say that we're going to raise rates to give the credibility play, but we still reserve the right that if something changes to not do it.
But why do they want to raise rates in the first place?
For credibility that things have gotten better.
Right.
And you know what?
Even though they haven't, they keep saying that we're going to raise rates and it's data dependent. The data comes in, it's no good, and yet they say we anticipate it's going to get better, and therefore we think it's appropriate to raise rates later in the year. And I think they'll go ahead and do that because they've managed to convince people that we are headed in the right direction.
Well, they've convinced everybody but us.
Well, sure, but we're talking in a very small echo chamber here.
Well, it wouldn't matter if they had convinced millions of people. As I mentioned, they're still going to do what they want.
Well, yes, but I think one of the things that's important to this whole game and media event is they have to have the buy-in of the majority, and they do, because most people aren't paying attention, and those that are paying attention and trading on Wall Street and doing all these things, they believe in the Fed.
Well, they don't, but once again, they don't really have a choice.
Correct,
but
it doesn't matter. But when in prison, eat the prison food.
Yeah,
that means that the prisoners are going along with because they're with the warden because they're being treated fine.
And that's why I continue to say that regardless of what happens, we're not going to have a stock market crash before the next election, because I think it would be disastrous.
I think they've realized now that providing liquidity, minor interventions, if they're not enough, they will just buy every last share that's dropping in the Dow and the S&P 500 to make sure it doesn't go down.
Well, and you have every other country around the world struggling, right? And having their own set of problems that are probably not as bad as ours, but maybe a little less, but it continues to look as though, we're fine. And so we can always push off and say that, look at China, look at Greece, look at all these different countries, and the media controls things as such that it doesn't matter how bad off we really are here. It doesn't matter.
Who talks about how bad off we are? Who talks about how bad off we are?
Just
who
you and I?
Yeah, about the food stamps, about the
44% of entitlements, yeah.
Exactly. No one talks about that because that would highlight that the economy isn't doing well. But if people are getting those benefits, then you've effectively bought them off and they think, well, this isn't great, but it wasn't great before anyway. At least I have this. So they shut up.
Well, that's where we're at. I mean, we're at basically a socialist regime at this point. And nobody's going to recognize it as such, right? But you get the masses on, we have healthcare like that. We have 44% of all Americans on some sort of entitlements at this point. But yet we want to point... They brought up retail sales in the meeting, I believe, and June retail sales were negative 0.3 versus the estimated of plus 0.3.
As you and I had predicted.
Right, and she goes
on. Because
the
consumer is tapped out.
But Yellen goes on to tout that auto sales are up. right?
When you give away free money to buy them.
And that's what I was going to say. Great. What does it really mean just because car sales are up when they're giving out loans at 20% to people that shouldn't be buying cars?
Right.
I mean, you're making it very easy. It's very easy money in the auto industry right now to get a car loan. But that doesn't mean that the economy is moving and it's more robust. It's not. Okay, and then we have the PPI come in hotter than expectations. So now all of a sudden they can claim that inflation is moving towards their target of 2%, which means that they should be able to raise rates by the end of this year, right?
Absolutely, Ryan. Right now they have all the data going in the direction, but that data does not help you or me or anybody. Just because things are getting more expensive doesn't mean the economy's heading in the right direction. But what it does mean is they can raise rates, and then they could say we raise rates because the economy's moving in the right direction.
Yes, and if they do that, it continues to signal to the rest of the world, at least in the media's eyes, that we are doing better than everybody else, and that we can continue to do what we're doing for an infinite period of time.
Buy our bonds, buy our bonds. And that's Ponzi scheme 101. The way you pay off the prior debt, and the only way you can continue to pay off the prior debt and the future promises.
New money.
Is new money. Well, raising rates will attract new money would mean U.S. bonds are on sale. And they can't afford to have a decline in foreign purchases of U.S. bonds. And the U.S. loves the fact that the euro's under pressure right now, and that the real safe haven has been established is the U.S. bond market. Even if people want to use other currencies for trade, okay, fine. But as long as they buy our bonds, that can keep the demand up for the bonds, and that's why they're going to raise rates.
Yeah, I agree with you.
And if you think about it, because, Ryan, they insist they're going to raise rates. And the reason they insist on it, it can't be based on the data. The data hasn't gotten any better. They know that they need to maintain demand for the U.S. dollar and the U.S. Treasury bonds. And then people say, well, wait a minute, they don't want the dollar to get too strong. It won't. They can go in the currency markets and they can buy. They can sell dollars. They can manipulate that so the dollar doesn't get too strong. What they want are foreign buyers of U.S. Treasury bonds, and they need to put the bonds on sale to get it, to combat de-dollarization.
Yeah, and one of the things that they need to do is they need to signal to the markets well in advance of what their moves are. So people can properly position, right, so that nothing is going to be something that just happens out of the clear blue. They're not gonna do that because they did that once before and upset the markets to a pretty almost disastrous level at that point. And so they're not going to do that anymore. They're going to signal well ahead and say we reserve the right, of course, data dependent. Well, it's not data dependent. It's because they have data that's showing that the economy is not great. It's just whatever they say. They should stop saying data dependent and just say whatever we say the economy is doing.
But only those in the alternative media think or insisting that the Fed can't raise rates, won't raise rates. And they say they can't raise them because U.S. can't afford to service its debt if they're higher. Did you see that the deficit is down now this year again? Well, that gives them another way of saying we can raise rates because now the United States has a lower annual deficit. And again, Ponzi 101, it doesn't matter if the debt gets too high to service. They just issue more bonds. Sure, they might have to pay more interest, but they're not paying anything now. And I keep hearing this argument, the U.S. can't afford to pay anything other than zero. Sure they can if they keep issuing bonds and people buy them. That's what a Ponzi scheme is. And these are the same people who call it a Ponzi scheme. Well, if you know what a Ponzi scheme is, you do whatever you can to attract new money. And if you have to raise rates a little bit, you raise rates. And then once they raise them, Ryan, that gives them the ability to lower them again.
Yep.
And they do QE. They're going to have to. They can't just stay at zero for 10 years because people will start to lose confidence in the dollar, stop buying treasuries because they don't pay interest, and then they've lost. So they raise rates, they get new money in, they continue the Ponzi scheme, and then they lower them again.
Well, you're 100% right, and that's why I said that this can go on indefinitely because they can hike maybe 0.25, and then maybe hike one more time for 0.25.
Or in between the next hike, Ryan, they could talk about it for 6 to 8 to 12 months.
Yeah,
right. Raise them again.
Yeah, we're
now
buying
you got 2 years. Now you've got 2 more years. Then they can start talking about lowering them, but not do it for a while. Now you're 5 years down the road, and you're back to zero again.
Well, so I've had this discussion with a few people. Is that okay? So let's say that all this happens. What about like mortgage interest rates? What can happen there? And I'm like, look, gold and silver treasuries, mortgage-backed securities, all of that can be manipulated. So even if we have the key interest rate basically raised up, don't think that we can't slip in there and continue to buy mortgage-backed securities to keep them down, right? Nothing's off the table. They can manipulate however they see fit. So if we start to see that housing slips further because, okay, the half a rate hike is affecting that market, they can easily slip in there and start buying more. There's nothing stopping them because this Ponzi scheme, as you mentioned, it's unlimited money. They can print, they can paper over anything. So it doesn't matter. All they're trying to do is to maintain the credibility, to maintain the integrity of the dollar. They don't want to lose the reserve currency status. And as long as every other country appears, media-wise, in a worse position than we are, we can do that.
Media-wise, exactly.
But that's funny that we're talking about media. It's the way that it's looked at, the appearance to the masses, right?
Yep.
It's not what's really going on. Reality is that we are in so far over our heads. But nobody will say that other than us.
First of all, not many people even realize it because of the distractions. And then when the people that are paying attention, they're told a different story.
Well,
so basically, you only have a very few people that are paying attention and say, wait, this isn't going in the right direction. Most people don't even know anything about it, what's going on. And then the people that are paying attention, most of them are being rewarded in some way, shape, or form by this economy. And then, so who's going to complain? If you're a media journalist, look at this guy, Pedro da Costa. He loses his stature because he's not allowed now at the Federal Reserve press conferences. So everyone else is going to shut their mouth because their careers are dependent on having access to these people.
We've talked about this before. Ron Paul's career as a politician was over the minute he started talking about auditing the Fed. Right? They shut him down. They stopped the media. The media stopped covering him.
Oh, you mean as a presidential candidate? Yes.
Correct.
Yes.
And it's mainly because you cannot...
He would finish second or first in the primary, and they would leave out where he finished.
Yeah, I mean, you can't talk against the machine. The machine is the Ponzi scheme that's taking place, right? And
Correct.
It's money, and that's why I said it's irrelevant.
It's a confidence game. And if you break the confidence, if you're out there trying to break the confidence, they're going to break you.
Well, money controls the system, not actually politicians. Money controls the politicians.
Exactly.
And so the minute that everybody comes to those terms, that's why I always find it funny that on social media and everything, it's always about these political things back and forth. I was like, you guys don't get it. None of that matters because they don't really care about that part of it. That's just to distract people because it doesn't matter who you vote for. They're going to put in office who they want. Everything else is manipulated. Why wouldn't we think that politics, the presidency, all the way down is manipulated the same way? Because
and
they
when
can't
they get in, Ryan, they don't do what they said they were going to do.
They conform.
Exactly.
They conform. It's been conformity. It's been the traditional crap for how long now? And as we've mentioned, we say kick the can down the road. They can't stop it. They can't stop kicking it.
Correct.
They can't at all. And so
they keep laying new road.
They're laying, yeah. I mean, because they can keep printing money.
Right.
That can
Everyone
lay
says
new
they're
road.
going to run out of road. It's a dead end. No, it's not.
Well,
they can continue to issue more credit, more road, and keep it going.
And
the only way it stops is if people actually realize that we're all broke.
It won't happen, though, Louis.
It's like the Emperor's New Clothes.
It won't happen, though, because
you know what? The story of the Emperor's New Clothes, that kid would have gotten shot. Pointed out that the king had no clothes.
You're right about that, but I mean,
the kid would have been at the parade ground, and he would have said, "Mommy, look, the king has no clothes." The kid would have been shut down right away.
Well, if we're at 44% of Americans essentially are dependent upon some sort of entitlement, and we're going to be moving towards 50 to 60 to 70% in the coming years, there's no reason for them to see what's going on, to care what's going on, right?
Correct.
And that's why the country itself is self-destructing because the government's getting what they want. They're getting bigger and having more control. And our markets are mass manipulated. I mean, it's a dangerous time. It really is.
Well, it's come to head in Greece. If you look what's happened there, is the people aren't going to get placated. Mm-mm. And you just have to wonder what the social political scene will be there. I mean, are they going to swallow it and say, well, at least we got something? And that could be. They could be a beaten nation, a beaten people, and they may take it lying down because they don't really have a choice.
No.
The only choice they have is to say, we default and we're starting afresh and we're going to take our medicine all at once rather than, the medicine over a period of time, which is nasty because they're never going to emerge from this hole. All they're going to do is work to pay back the debt.
Mm-hmm.
They'll never be able to grow, and eventually they'll just collapse anyway. I mean, they're going to get kicked out. I think they either get kicked out of the euro or they'll decide enough is enough and they will take themselves out of the euro. But all they've done now is they've stretched it out. So when Greece finally leaves, it's already priced in and it won't be an issue.
Everything is priced in. Everything. I mean, as you mentioned, like the potential Fed rate hike coming this September, whenever it comes. When you look at the 10-year note and where we were before they started talking about it, and where we are now, it was like 1.9. Now it's like 2.36, somewhere in that range.
So it's already gone up a quarter point.
Yeah, it's already gone up by the amount that they were talking. People have already baked it in. And so when you signal something for almost a year that something's going to happen, I mean, you got time to adjust, right? And so there's nothing that the stock market has really any worries for at this point, in my estimation, because as long as they're going to maintain that they're going to continue down this road and they'll make a credibility play and more money, new money, as you mentioned, new money will come to the United States, then we can continue this.
Mm-hmm.
And
that's all they're interested in.
If we don't get new money, then somebody else has got to print some more. Right? More QE.
Printing has its own problems because when you do QE, you run the risk of China and Russia and all the other countries saying enough is enough. We're not going to buy U.S. Treasuries. We're going to de-dollarize. We've seen that, and that's why the U.S. had to stop QE. Now they're going to flip the game around and basically play Treasury bond promoter and say, look, they're on sale. Rates are higher. Come get them.
Well, and that's also, don't think that the uber rich and wealthy are not paying attention. I mean, there's been many people that have come out and said, look, it's all going to come to a crash. Somebody's got to look like the one that sees the future, right? So we're not seeing gold and silver prices really go up, but they're continuing to stack their piggy bank with these hard assets. Mm-hmm. So inevitably, they'll be in the position that they won't go busto when it all happens because they will have something to fall back on. But the average American won't. The average American will still be holding the stocks or whatever else. They probably don't even have those.
I was going to say, the average American doesn't have anything.
But if they do have something, they may have a bit of a 401 account, correct? That's probably invested in those stocks.
What most Americans have, would be that or a home that they're underwater on. Unless you're living in the money center areas like San Francisco, New York, Boston, Los Angeles, maybe Chicago, your home went down in 2006, 7, and 8 and hasn't come back.
Not at all. And,
or D.C., Washington, D.C. is the other one.
Yeah, so we have those metropolitan areas that will always, be somewhat strong. I mean, they'll drop, but they won't ever drop by as much as the rest of the country. Mainly just because that's where there are more jobs. I mean, a job situation, it's so funny because nobody wants to acknowledge that, there's more and more part-time workers. There's more and more people getting laid off. There's more and more government contractors going bankrupt. There's more and more of all this stuff taking place. And as I mentioned, I talk to all these people, Lewis, so that I don't really care what the data tells me. It's what people tell me on the ground.
Right, because the data does tell you that wages are stitle flat.
Wages are flat. They're not rising. Hours are down, really. You don't have as many full-time employees. So what is that, signal? Well, I don't know. Maybe the economy stinks and that nobody's going to take risks. Big businesses are having to sit on cash if they have any.
Or use it to buy back their shares to make it look like things are going well.
Of course, to create more appetite, right? More appetite for me to jump in on this stock of Zillow that hasn't made any money in 12 years or whatever it is now.
And the analysts have no reason whatsoever to doubt these companies. And again, to ask the hard questions. They want access to these companies. They want the shares to go higher. So they're not going to say, hey, you haven't been profitable for 12 years. When's it going to happen? They'll ask, they'll just say, great quarter, guys. We see that you upped your eyeballs, or you completed an acquisition that's not going to make you any money, that duplicates 3/4 of your efforts.
I'm trying to think. So our jobless claims last week. Well, they come out today, but the last week's were 297.
297. They were high, yeah.
Versus 276. So what's funny is that this week they're saying, especially this is right after Yellen's testimony. Now, this will tell you all you need to know, Lewis. If this lines up based upon what she said in her testimony, and they're coming out today. If they come in like just a touch better than expectations, right? Because they're already estimating that they're coming in better than expectations. They're expecting, I believe, to be down 15,000 to 282. And I would imagine, based upon how everything's gone, that will happen. It'll be pretty much spot on. Because if it doesn't, that's 2 weeks of negative numbers, and then they'll have to explain that away. They'd rather it be negative 1 week and then better the next. And as long, it doesn't even have to be better than it was a couple months ago, just as long as it's a little bit better. They can continue this forever.
And it's funny, Ryan, they are saying in some of the media, this is the best job market since the French Revolution, the way they talk about it. they talk about a lot of the economy in these superlatives as if this is the golden era of the United States. Mm-hmm. I mean, it's not even close, but the fact that they even get away with saying that, or that Obamacare is a massive and stunning success, and then they cite, well, there's 20 million people that didn't have insurance and now have it. You could have just given those 20 million people insurance and not messed with the whole system and had everyone else's premiums go up 60, 80, 100%. I mean, the way they spin things is that somehow everything is awesome and everything is wonderful. And it's not. And I don't know. I don't think people even care. They're just not paying attention. They're just either too busy struggling to get by, or they're distracted, or they're making money off of this. And it's unfortunate. I think the people that are making money off of all this, they're the ones who control the narrative. Well, the people that have money, obviously, don't want to be touting to everybody else that everything is terrible. They want to stay in power and say things are great, to highlight. What they don't want to do is draw attention to themselves that we're living high off the hog. And by the way, you guys are doing really terrible. They want to say everything is wonderful and everybody's doing great too.
Yeah, and the average person doesn't care about like really money in general. Like they don't.
They don't know anything about it.
They don't know anything about it. They probably, if you asked them what the Federal Reserve was there for, they couldn't tell you. No. And so with that being the case, the politicians play into that because they know that they don't need to talk about money or the Federal Reserve or any of that.
Well, the president doesn't know anything about money.
They'll talk about social issues, stuff that get people all riled up and distracted away from all these problems. So when you have
Jenner.
Correct. When you have that type of stuff going on and that dominates all the feeds, Twitter feeds, Facebook feeds, when that's what's dominating, why would anybody expect? And that's why I said, it's going to take a ton of people, for the majority, to wake up. It's not going to happen, Lewis.
No, you have to take their bank accounts.
Well, and
you have to send them to war. You have to do something to get people's attention.
But see, then that's where they're going to cross the line, and I don't see that happening.
Well, they're not going to do that. No.
Yeah, they're not, because that would then, you're creating an uprising versus just placating people and giving them just enough to survive.
The only way you can do something like that is you already have plans in place to either placate or quell. If you're carefully planning, you don't just spring on people. Like, you're not going to wake up tomorrow. There's zero chance you're going to wake up tomorrow and they're going to take 80% of your bank account. Mm-mm. That just isn't going to happen.
Yeah, it's everybody always wonders, is like, everybody's going to have a run on the banks and pull all their money out. It's like the whole reason why they have the FDIC insurance is a joke too, because they don't have enough money to pay everybody back.
$25 billion to cover $190 trillion or 90, whatever it is, ridiculous amount. They don't have enough money to cover.
And of course the Federal Reserve is there to backstop that as well. It's endless. I mean, and as you like at the top of the show, we're talking about this could be the greatest Ponzi scheme of all time, because
it's global.
It's global. Everybody's is basically involved in it. Everybody's looking around at everybody for answers, and nobody has any answers because they've gotten themselves so far. They've built the road so far, kicked the can even further. They can't get out of it.
Remember we said, when you find yourself in a hole, you stop digging. They can't. They have to keep digging. They're so far down the hole. Stopping digging isn't going to help them.
It's not going to help at all. And what will take place over the next 5 years is probably much of the same. We'll see that the key interest rate will be changed up and down. We'll try to bring in as much new money as we can. We'll paper over any other problems we have. We'll manipulate the markets as we see fit. We never will let gold and silver prices hop up too high, because that would signal to the rest of the world that we're not doing as good as we thought. Stock markets can't crash. They don't want that to happen. They may climb to 50 or 100,000. Who knows? But that's where I can honestly see things going, Lewis. It's like this. I have not seen any evidence that things will reverse for the worse. I haven't. And as long as the Fed is there, we can continue to guess and say it shouldn't. But I feel like that they're in such control over the media and everybody else, and the majority, as you state, that there's no reason why we would think that it will change. We see these temporary dips and things like that, and they'll blame it on a technical glitch, right? They'll be able to make up excuses for everything. And the markets will go along with it, because as long as they're making money, as everybody's making money, everybody's happy. It's only when they lose money that they start asking questions, which is why I feel like that's not going to happen.
Yeah, well, they probably learned so many lessons in 2008 of what they could have done wrong. One of the things they did wrong after 2008, 2009, they let silver and gold go for 2 or 3 years.
Yep.
They let them go skyrocketing, and then they finally said enough is enough, and they shot those down. And then they went on the anti-gold offensive in the media. I mean, every week you see 3 or 4 stories from the mainstream media trashing gold. Well, if no one owns it, why do they even talk about it? They're trying to make sure that people don't go anywhere near it.
Yeah, what do you want that for?
Yep.
Don't pay
the
attention.
best one I ever seen, I don't know if you've ever seen this video clip. It was when the golds first started going down. They interviewed, they had like a reporter. I don't know why she was out in the field. They were like having the camera go out to her so she could report on the price going down. And she was standing out. I don't know why she was outside. But anyway, I'll post it for our listeners on the website. She starts talking. She says, yes, gold's down from 1,800 to 1,600. But the real question people are asking is, what is gold really backed by? I mean, it's not like the dollar, which is backed by the U.S. government. I mean, that's the type of propaganda they put out there. But to the average viewer, they start thinking, yeah, I guess gold isn't backed by anything. It's not like that's the point. Gold just is.
Yeah, I should give my gold up for dollars, right?
And that's the kind of propaganda that's out there. Then you have these constant people. I mean, when the gold was rising, there weren't stories every week about how it went from 800 to 900 to 1,000 to 1,200. But once it started going down, that's all you heard about. Why it's not worth anything, why it's going to continue to go down, why it's a bad investment.
Yeah, and there was so many financial other analysts out there that were basically the alternate media that we were talking about that talked, like everything was going to come busto and gold was going to go to like 5,000, 10,000, who knows. But where we're at now, I don't see that as being a possibility. Not anytime soon, because the way that they know that they have to manipulate markets to keep this going, they can't have those prices rise up. They can't.
You know how silver can go up? Forget gold, because people don't actually need gold. There's no pressing need to have it. If you don't have gold tomorrow, like if I don't have an ounce of gold tomorrow, my life goes on. But if I'm running a factory of electronics manufacturer, or I'm running my solar business, I have to have the silver. And that's a case where if the prices go low and investors scoop up a good portion of the mining supply, and then the people who actually need it on a daily basis can't get it, or if that's when the price can go high and get out of control. See, gold can be manipulated because central banks have 30% of it. A lot of it's traded on the paper market, and there is no real physical demand. I mean, I need an engagement ring. That might be something I have to have, but I don't need a gold necklace. I don't need. There's just not a pressing need for gold as there is for silver. And silver is only $15. It's below that today. So silver is the one that could really go higher if the demand for it actually exceeds the supply, irrespective of what they're trading on the paper futures contracts on COMEX. Then the paper market will decouple from the physical market, and you'll see the prices go higher, because it's so. And also, if the mines stop producing as much as they have been and can't meet the demand, and demand surges, then I think you'll see a decoupling of that market. But otherwise, if it's just down to trading, they can create infinite amounts of paper shorts that aren't backed by anything and sell gold and silver short, and it'll go down.
Yeah, I mean, anything, it's coming down. That's what it seems like it comes down to anymore. It's just the trading aspect, right? Like it's.
Well, the way to make money, Ryan, is to short gold and silver, take your paper profits, and then buy physical and vault it in Switzerland. Eventually, if a lot of people did that, then there would be a shortage.
Mm-hmm.
That's the only way you can beat them at their own game, is make money shorting it.
Yeah.
But then taking your proceeds and buying the physical.
Yep.
I don't have the money to do that.
It could get a bit pricey.
Yeah, but what I'm saying is that the people that are always constantly saying COMEX is going to default, someone's going to stand for delivery. No, they're not. People are on COMEX to trade contracts. They're not there to buy silver, to buy gold.
Mm-hmm.
If you want to buy gold or silver, you go somewhere else. There, it's a casino, and it's not meant to be a place to buy gold and silver. And the only way you're not going to beat the casino at the casino. So the only way you can do something about COMEX is to go along with it and to make money shorting it, and then taking your proceeds and buying physical elsewhere.
That's true. I mean, it's and if the way that this keeps up, that's probably a great approach. We've got mortgage interest rates that are still, 4%, sub 4%, and even with that interest rate hike that would potentially come in September, there's really not going to be any bearing, I don't think, on mortgage interest rates, as many people are thinking, because it's already baked into the 10-year note, baked in. Mortgage interest rose over the last couple months, so they have already ticked up. So I think that's already taken place. So I think it's that we don't have to really worry about much being too different in the real estate market. I mean, it's going to be much of the same. Much of analysts talking about that, there's another boom coming. The millennials are coming. Look, the millennials finally found a job. We'll get that hype. We will. But it's not. We don't have anything that tells us that we have any sort of sustainable growth. We don't have wages rising. We don't have anything that we need to actually, have this so-called recovery. Because technically, we're a bankrupt nation that is just papered over everything. It's a Ponzi scheme at its finest, and they can say whatever they want. The analysts can talk about the stock market all day long, and they can discredit gold and silver. They can do all those things, but it doesn't take much to just look at what we're looking at, Lewis, and say, you know what, this is just a mess. It's a mess.
It's a total mess.
It's a total mess. And we'd talk about it, and people could point to us and say, well, they're not right because look at the stock market, right? They're not right because look at gold and silver. Yeah, we get it. I get it. But you'll also be the one that loses everything, and then will claim that you didn't see it coming at some point, because inevitably. And that's why I said it's almost like we have to go to bigger government so that there's more control, because that's the only way they can continue this Ponzi scheme.
Absolutely.
It's unfortunate, but that's what has to happen.
Well, if you think about it, they need to get more and more people to participate, and it's not just more and more people to participate to put money in. It's more and more people to participate to prop up with media and say that this is a good thing and this is the right approach and so on. So you need to get people in politics and media, economics. You need to get people across the spectrum to buy into the Ponzi scheme, voters. So it's not just in a typical Ponzi scheme was all you need is more money. This one you need more and more buy-in across the board.
Yeah, and then we get our politicians and our president to make his random mentions about Greece and China and how they're not doing well, right? But it's not going to affect us here on the home
But that's
front.
right, but it's not going to affect us.
Yeah.
But then in the same speech, when he's talking about global warming or something, we're all connected. What we do here impacts there. What they do there impacts here.
Well,
but in economics, no, it doesn't. We're not all interconnected. Whatever happens in Greece stays in Greece. It's like Vegas.
It is the truth, right? It's amazing how that works. But I think obviously the testimony. She's got another testimony today. I can't imagine it's going to be much different than yesterday. Yellen, anyway. So we'll follow up next week. The jobless claims come out, I believe, at 9 a.m. this morning. So we'll be able.
No, 8:30.
Oh, sorry, 8:30. So they're coming out probably right now.
Yes.
About a minute. So it'll be, and maybe we'll just actually stay on a line for another minute here, Lewis, and we'll watch that come out so we can pull those up.
Well, you're predicting they'll be slightly better than expectations.
Just slightly, just a touch.
Yeah.
Because I believe it was they were expected they're expected to be down to 282,000 from 297,000, so about 15,000 decrease. Which the pivotal level that they claim is like 300,000, so they don't want to get in too close to there. Let's see. Official jobless.
Did a refresh? I got nothing.
Nothing.
Yeah. Citibank posts highest profit in 8 years as costs plunge. Wonderful.
I mean, it's just doesn't even. It's not even worth talking about how crazy things are. Companies, you know.
You were right. 281 versus expectation at 285.
There you go.
So now she can say, she said, we need to, the way they're going to raise rates, she said, was either the data comes in the way we want it to, or we expect it to come in the way we want it to.
Mm-hmm.
So it came in okay. And now what she's going to say from this number, or the Fed, is we expect it to continue to come in the way we want it to, and therefore we can raise rates.
Yeah, and it'll be on a seesaw, back and forth. One week it's, 290, next week it's 280.
But if it's not, but then what they'll say is the non-farm payroll is indicative that people have jobs and they will start spending, even though they haven't stopped spending.
Yep.
I mean, they haven't started spending. And you had Meister, just to finish off here, she's one of the Fed presidents out of Cleveland. She said a small increase in interest rates from zero is not tight monetary policy. And with the economic progress we've made, and I expect to continue, monetary policy can take a step back from the emergency measures of zero interest rates. Okay. Well, she's right. I mean,
yeah, she is.
So that's why they're going to raise rates. I don't know why people are adamant that the U.S. can't and won't raise interest rates. They're going to raise them not because the economy is getting better, but because they want to, they have to, and they will.
And we want new money.
Absolutely.
Come on, bring it to us.
And that's what that's what the new money brings, is credibility. They can say the economy's doing better, and they'll try to do a self-fulfilling prophecy. The economy's doing better. See, the Fed raise rates. And they're talking about another one after that.
Of course.
And Yellen said, remember, it's the pace of how we raise them, which we anticipate will still remain highly accommodative. So they're not going to go and normalize them to 5%. No. They're going to raise them a quarter, talk about it, maybe raise them a little more.
Yep, I agree with you.
And then they'll lower them, and then they'll do QE4.
And we'll still be talking about this 5 years from now, Lewis.
Yeah.
Well, yeah. I appreciate you coming on, Lewis. If you wouldn't mind, give our listeners your blog so they can check out your post this week.
Thanks, Ryan. Smallgold.com, SMAULGLD.com. It's a blog about gold, silver, real estate, Federal Reserve, and so on. And the most current blog post up there about the recent surge in gold and silver sales at the U.S. Mint. So please check that out, smallgold.com. Thanks, Ryan.
Thanks, guys, for tuning in. Also, you can go to the website, realestate360live.com. There's an Ask a Question button on the right-hand side for any questions or future topics that you'd like us to cover. Also, you can download, subscribe, share on iTunes. Until next week, guys, take care.